Alright guys, hello. Welcome to Tuesday, the 17th of March, 2026. And you guys are getting a trading recap. So we took a loss today, but that's fine. I'm not fussed about it. Losses are part of the game, right? I'm still learning, aren't I? Now, economic calendar, nothing, okay? Obviously checking Forex Factory and Twitter is very important. So let's look at the weekly. Looking at the daily, sorry, we can see that NQ taps into its cap just a little bit, right? And ES fails, so we get an SMT at those highs, okay? So today we see that bearish gap, ES fell from an SMT at those highs. Given that we also failed to close above, right? Given that we failed to close above, we could expect to see shorts today, right? Overall high time frame has the draw to these lows and obviously the more long-term ones, okay? 4 hour doesn't really provide a lot of information, okay? Apart from obviously highlighting that SMT at the bearish gap, okay? Interestingly, the 1 hour reacts from this hourly gap, okay? We see price reacting bullishly, okay? And disrespecting a bearish gap. This is a bearish gap, gets disrespected, bearish gap, disrespected, okay? With loads of displacement as well, loads of displacement. And I was interested in seeing if London was what caused the reaction from that gap. And if it did, we could see London reversal New York continuation higher. So pre-market, what do we see? New York move lower initially, right? I mean, you can say we move higher before we move lower, but here we chop around lower and then we move off higher, okay? London session does cause the reaction for price to move off higher, okay? So we're not happy we see price move lower before moving higher. London session does cause the reaction of the bullish gap, causing price to move higher. As a result, since this is a key level, we could anticipate higher prices intraday, okay? 15-minute chart also shows us respecting this bullish gap and moving off higher, okay? Now, nothing really happened since then and went straight into market open. Okay, so market opens and what do? We rally into the daily gap. Okay, I'm waiting for a confirmation with regards to either bullishness or bearishness out of this key level. We also take out a bunch of buy side liquidity. So got buy side, and then obviously this area that's going to get hit as well. Now, there is a 4-minute intermediate high here, right, on both pairs. Right, why? Because there's a bearish gap. We tap in and we move lower. Okay, if we break through, we can expect bullishness. Okay. ES looks to be a lot closer to taking it out than NQ. If we get weakness, we could see price moving lower. I do need to take into account that price has been pushing higher and showing more lenience towards buy side, right? Bullishness, okay? Price could retrace into this 5-minute gap and then rally off higher, but I want to stay a little bit more patient than just that and get clearer price action on this level like I intend to, right? Because we are in this daily gap and it's important whether we react lower or react higher, okay? On the 1 hour, we have a bullish gap that has formed, right? This is the bullish gap, okay? Now, if we respect this bearish gap, okay, I could be interested in looking for an entry on the retracement, okay? Targeting internal liquidity, aka that bearish gap, right? One thing I've noticed is that we have generated a bullish SMT. Okay, this is the most recent, so bullish SMT. And what does the price do? It reaches into this gap, okay? We do need to remember that price has been pushing a lot higher from London, highlighting a continuation to occur today, possibly. Given the comment above, I'm contradicting myself by saying that we are obviously in a 15-minute gap, okay? And the best thing to do here is to wait and assess what the market does. Right now, I'm going to wait and react to see what the market does. It is likely for price to move in both directions. If price respects this 15-minute gap and moves lower, I can see an opportunity to take shorts to the internal liquidity, the hourly bullish gap. If not, I can see price running on higher to further external liquidity, okay? What do? I just completely ignore that. I just completely ignore it. And what do I see here? We have an SMT, okay, on a 5-minute. Then we have a 2-minute displacement leg. And then we had a 1-minute gap right here, okay? So this was the trade like this. We had this SMT on the high time frame, bang bang, 1-minute gap was right here, and that was my entry point. Okay. So trade idea in better display, 1-minute bullish gap within the discounted region. This could be a poor trade due to the fact that on the high time frame we might be getting a down close on this key level, right? I'm now entered on this trade, okay, and this could not be the greatest setup due to the lack of displacement, right? So a couple of things, the setup quality wasn't the best in my opinion, okay? Why? Well, here, this was the SMT, right, swing high, and we don't get a lot of displacement through it, right? We only get one candle and then we start to consolidate, okay? I like to see large candles pushing through, okay? We don't get that, and then we see a retracement into this kind of gap, and with no time, bang, okay? So within what, 1, 2, 3, 4, 5 minutes we get stopped out, okay? Now, the lesson learned with regards to this trade is patience, right? Definitely patience. If the market forms gaps at New York AM, it is best to sit and wait for a reaction from this area. Reason being is because price is likely to come back down into this area, okay? I think what went wrong with the trade was the lack of patience, and it was not the best of a setup, okay? We did not get a lot of displacement through a high. In fact, it looked like more than a sweep, right? Than a displacement of the short-term high, sweep through, and then we start to get failure swings and we break down lower. I took a trade within the current market direction, right? So obviously we were pushing up higher for most of the morning, right from London reversal. So from London close to about New York AM, we continue to push higher, okay? However, I should have anticipated a reaction. Why? Because we're at a key level, especially a daily gap, right? I commented to myself earlier, but just went against and ignored the comment. These key levels shape price and are what cause a continuation or reversal in which external liquidity or internal liquidity is targeted. Okay. Now, the thing that I can see happening now is price running into this internal liquidity. Okay. And then possibly taking out those external liquidities, external liquidity. Yeah. So this external liquidity in New York PM by running on a bit higher. Okay, this could happen. Unlikely for price to completely reverse for now, given the current market profile, right? I think price would prefer to protect those London session lows. Now, all it would have taken was some patience and adaptability and slowing down and not rushing, and I would have been able to take an amazing trade, an absolutely amazing trade. Okay. Now, I probably would have been stopped out here, if I'm being honest, because we would have, as you know, I would have put my stop loss at break even, and I wouldn't have gotten stopped out, right? But this trade was amazing. Why? Well, let me show you. So here we had, I think it was a 5 minute. Let me actually see if I explain it. All it would have taken was a little bit more patience and better adaptability, and this entry would have presented itself. The image here displays a 5-minute SMT on ES. So here we get a 5-minute SMT. Okay, you can see we take it out here, and we fail to do it here. Okay, and then a 3-minute displacement leg. Okay, with what? A swing low being taken out with displacement. Okay, with displacement. And then what else do we get? We get a 3-minute gap. Okay, we get a 3-minute gap here. So it's all a 3-minute entry. Okay, stop loss was at a 5-minute candle close, and TP was at a low hanging fruit low. So okay, here, start of the bullish gap here, and then the start of this one as well. Okay. Now, this is nothing to be upset about. It's actually good to see. This strategy seems to, so far, to be very efficient in terms of producing output. I think the key thing here is to get an SMT on a time frame higher than your entry. Here, the SMT was on the 5-minute, therefore held on the lower time frames with the price taking a short. I'll update my strategy with this mark, which is what I did. However, lesson learned, patience and adaptability is as hard a skill to master in this field, but all it takes is perseverance, and it's accomplishable, right? This key level was ran into. Look, here we had a 15-minute gap being respected. This was the start of the decline, right? We even get change of state delivery with a lower time frame SMT. Okay, so that's that. I hope you guys learned something from it. I'm actually liking how these going through this report, the journal reduces the time length of the recordings. But yeah, that's that. And I'll see you lot tomorrow. All right, bye bye.